for the Investing News Network. I'm Brian McGovern, and today we're going to be talking about the cannabis industry and the year so far. With me is Dan Ahrens, the Managing Director and Chief Operating Officer at AdvisorShares Investments. Dan, thank you so much for your time.
Hey, thanks for having me on again, Brian. Nice to see you.
Of course. Now, as we all know, you're managing two funds in the cannabis space. You're looking at the sector very closely. Uh, let's start with the big news that we've had so recently. Chuck Schumer, the U.S. Policy, things are moving. Tell me about your general reaction. Like, what do you think about this announcement, and how can it impact the market in the next little bit?
Sure. We've been waiting for this a long time for Chuck Schumer to drop his bill. We find out today that it's actually just a draft bill, but they've been promising this for a long time. I've been saying all along that, politicians got to be politicians, and there's an awful lot of things going on behind the scenes. Now, when we actually see the bill, yeah, it calls for, things like descheduling. It calls for a path to uplisting for U.S. cannabis companies, usually the multi-state operators or sometimes single-site operators, to be able to trade on the New York Stock Exchange, NASDAQ. It calls for banking. It calls for fixing of the tax situation called 280E. Now, does this actually have any chance in the world of becoming a bill and getting voted on? No, it really doesn't. And I think everybody knows that. And, when people are really reading the guts of this thing, there's a little disappointment. But that's not all that bad. The next step is, what does this do for Canadian cannabis LPs that have been chomping at the bit to get into the United States? Like I've been saying along, they're not getting in the United States anytime for the foreseeable future, if ever. And this bill doesn't call for any of that. So, no, they need to tap the brakes on Canada and just, keep burning money and keep destroying cannabis because they can't sell enough in Canada. Now, on the U.S. side of things, I've always been saying similar things. No one should expect a U.S. legalization anytime soon. We should expect reforms. They're not coming as fast as anybody would like to see, but everybody still agrees we're going to get some form of banking reform in the near future. The politicians are arguing about it, but they'll sort it out. And we'll see baby steps. They're going to slice and dice and argue and act like politicians and wait for backroom deals that will make each other happy. And the U.S. multi-state operators, they're just going to keep operating. They're just going to keep operating profitably in most cases. They're going to keep growing state by state. The financials look great for most U.S. operators. So people really should temper their feelings about this U.S. reform because U.S. operators are operating quite well.
Now, then, like you just said, you've mentioned that you're not expecting to see a splashy legalization path similar to what happened in Canada, but this kind of piecemeal, little by little reform and whatnot that could help the operators in the U.S. With the news today, do you expect to see any potential hype takeover in the market? We've seen in the past, time and time again, news that, takes over and gets interpreted in one way or gets seen in one way. And, do you have any word of caution for investors, looking at the cannabis market right now over the next, few months, few weeks, few months and whatnot?
Well, a word of caution is it's a long-term play. Everybody should have always realized that. And the second word of caution is, as long as these companies in the U.S., for the most part, are listed on smaller secondary exchanges in Canada, traded OTC in the U.S., they're kind of thinly traded comparatively. We're talking about multi-billion-dollar companies in many cases, but they don't see a ton of trading volume. And that makes it bumpy as heck. They're volatile. You got to be in it for the long term. I still believe we're in the early innings of U.S. cannabis. And most importantly, like I already said, these operators are operating state by state, and new states are approving cannabis, whether it's medical or adult use, on a regular basis. They haven't sold any adult use in New York yet. Do you know how big that New York market's going to be? And that's just one more state. That's an example. Again, if you look side by side with these U.S. operators versus a Canadian counterpart, U.S. companies have solid balance sheets, and they got revenue and revenue growth, and they're adding new markets all the time. Compare that to most Canadian operators. Yeah, they legalized it, and the provincial government rollout was a mess. They didn't have enough stores. They can't sell enough cannabis. They overproduced. They couldn't sell it. And they've been losing money for the most part quarter over quarter. The differences are black and white. And in the US, these companies are still going to keep operating. They're still going to keep operating and selling more and more marijuana, cannabis, whatever you want to call it, on a monthly, quarterly basis, and they're growing. Any kind of reform is a bonus. It's a leg up. But without any reform, they're operating pretty well, and they're getting pretty seriously undervalued again, in my opinion.
When we look at the first half of 2021, again, you're looking at the market every day, following the trends and whatnot. Have you been able to discern any particular long-term trends for the market so far this year? I know we've talked in the past about dominance of the U.S. growth and also the recent splurges of M&A seen across the industry.
Sure.
Is there anything else popping up to you that a discernible trend in the space, or are those two still the major ones?
Well, the things we've said and discussed in the past are still true. But if we're talking about trends, it's important for everybody to understand. I'm looking at actual returns through the end of June. That's the half-year point. It's a 1-year period from July 1st of last year through June 30th this year. Our fund YOLO, AdvisorShares Pure Cannabis ETF, it's up over 100%. Now, granted, that's coming from some of the lows back last year that were caused after COVID, but still, it's up over 100%. Our fund MSOs, AdvisorShares Pure US Cannabis ETF, it only launched in September. It's up more than 60% since then. But investors are so focused on what cannabis has done the last 3.5, 4 months, that they missed the point that they could be up over 100% or up over 60%, depending on when they invested and what fund they're in. The last 3-4 months have been lousy. It's been down, or it's been in a level trend, and a lot of investors are overly focused on that and frustrated. I'm frustrated, but we got to remember it's a long-term game. The other pattern that we've seen the last couple of years is slow summers and springs, and things really ramping up in the fall. And I said it last year that we'd see a separation where all these cannabis companies wouldn't move in the same direction and in the same amount, that we would see a separation where the companies with good earnings, good revenue growth, solid balance sheets would separate themselves from those companies that don't have those things. And more often than not, that means separating the U.S. companies from the Canadian companies. Now, hey, there's good Canadian companies. There's also lousy U.S. companies. But more often than not, the solid balance sheets, the growing earnings, the solid path to profitability or current profitability, more often than not, it's on the U.S. side of the border, not on the Canadian.
If we focus a little bit on that separation, obviously, you're right. You've been saying for a long time to focus on the U.S. and the separation between the two, and more and more financial experts coming into the space, looking at it, reviewing it for the first time, are pointing to the U.S. and those U.S. operators as the better play with the higher upside. When it comes to the actual US space, what are the things that, or maybe the metrics that you're looking at to separate amongst those, right? There's a blanket MSO statement and whatnot, or sort of, list of companies out there. What are the things that you really want to see to kind of start to separate, the between those companies?
Yeah. Now, before I say that, as it sounds like we're rah-rahing on the U.S. Cannabis a little bit, I'm not going to shy away from the fact that the MSOs are, U.S. ETF. It's only up about 10% so far this year. I was looking at the exact numbers. June 30th, 10.75% based on net asset value. Other cannabis ETFs, more focused on Canada, are up a lot more than that in this calendar year. I think it's kind of inexplicable. It doesn't make sense, revenue and earnings wise, but those are the facts. But I think from today's prices, looking forward, yeah, me and an awful lot of other smart people agree that the U.S. is the place to be for the future price growth. Now, as we say that, U.S. operators, we have a unique situation where we have a whole handful of companies that look good, but they're quite a bit different. A lot of people in the U.S. talk about the big four. Well, the big four are the four largest multi-state operators in the U.S.: Curaleaf, Green Thumb, Trulieve, and Cresco Labs. Very different companies. Curaleaf wants to have one of the biggest footprints, operate in the most locations. Trulieve is very focused on Florida, where they dominate. They got more than 50% market share in Florida, and now they're taking that real profitable model and starting to grow into other states. Green Thumb, it's a very, very good operator. A lot of analysts have it as their very best in class. They have some other dabblings, but they're mainly want to dominate in the Midwest. They're looking at, limited licensed states and, trying to be the best where they operate. And Cresco Labs does a similar thing. So, all four of these companies, we like their balance sheets. They're financially sound. The revenue and revenue growth, once again, of all four of those companies, when you compare it to the Canadian side, is ridiculous. The multiples versus their current stock price, they look very attractive. And if we move past those four companies, we really like Air Strategies. We really like TerraSend. We have a unique situation where we're betting more on U.S. and U.S. cannabis as a group rather than needing to be overly picky company-wise. But if you look at our fund, we have big commitments to those top four, top five, top six, and then we mix in a number of other smaller operators. But it's funny talking about cannabis in this way, because it used to trade on hype, on hopes and dreams. Again, I can't shy away from the fact that they're still volatile, but how do we pick the best companies? It's old-fashioned fundamental stock picking. Who has balance sheets? Who has revenue? Who has revenue growth?
No, absolutely. It's very interesting to see how far the industry has come. Now, Dan, as the last thing, when we, at this moment, as we stand looking at the second half of the year, what are some of the things that you're going to be looking for? What are some of the trends that maybe you're anticipating, or, any specific announcements from a company that you're looking forward to the most?
Now, mostly, as I already said, there's been a pattern where the fall has picked up an awful lot, renewed interest, and just merely the fact that these companies have been on a little bit of a downtrend for 3 or 4 months, or at least just treading water. I'm expecting a good fall. Now, the wild card is Chuck Schumer dropped this bill. Again, it's a bill that doesn't have any chance in its current form of going all the way, but it is certainly escalating the discussion. We're getting more and more of a groundswell of support for cannabis reform. It's happening with the Olympics. It's happening, with general public opinion. A lot of, people in government are feeling that pressure to do what people want. So that's the wild card, is which pieces of that U.S. reform move along and which get stalled, and how long it all takes. But I want to reemphasize, these companies are doing really well, and revenue is growing like crazy without the reform. The reform, any of it, it's bonus time.
Awesome then. Well, Dan, we'll have to leave it there as always. Thank you so much for your time.
All right, good talking to you as always.
And thank you for watching. Don't forget to like this video and subscribe to our YouTube channel for even more expert interviews. For the Investing News Network, I am Brian McGovern, and we'll see you next time.